In this video, we will be going over the difference between a liquidity sweep and a liquidity run. But first, let's review what liquidity is inside of the market. Basically, simple definition, liquidity is above equal highs and equal lows inside of the markets. So as you can see right here, I have marked off our equal highs while we were selling down. When we switch and we go into an uptrend, now price is more than likely to target these equal highs and these equal highs. Why? Because that is where sellers put their sell stops at, and the market needs to go up and take that liquidity for price to keep on going higher. So when I say that liquidity is the fuel of the market, it basically means that at these areas, more than likely, there are stops that are placed above these highs that price has to go to, and sellers who sold at this area have to transact with the buyers for the market to even move higher. So our higher time frame liquidity is always above equal highs or equal lows. Liquidity, the 1 hour and the 4 hour, are basically the higher time frame liquidity that we look for. When inside of an uptrend, you basically always want to look at when price was selling and where those equal highs were at. But you can also have what I like to call internal liquidity. So if you can see, while we were inside of an uptrend, we see that price created an accumulation, then price ran through this liquidity. Why is this liquidity right here? Because it's equal highs are being created and price is accumulating orders basically for it to even go higher. The same thing happened in this area. Price accumulates orders and then goes higher and runs that liquidity. So we have sell side liquidity being taken out, and then buy side liquidity being taken out within this uptrend on this higher time frame liquidity. So other than just 4 hour, 1 hour, weekly levels of liquidity, we also have lower time frame and what I like to call more time-based liquidity. A lot of people, including me, when I first started out, I was very confused about where liquidity was really sitting at and which liquidity to target because there was so much. And I'm an intraday trader. So when we talk about our lower time frame liquidity, we're basically looking at session-based liquidity. So I'm going to put my sessions on right now, and I'm going to go to the 15-minute so I can show you guys. So this accumulation area right here, where the chart goes all the way black, this is our Asian range. And most of the time, the Asian range is accumulation. So right here, liquidity is resting on the high and the low of this Asian range. Liquidity also is sitting below our London low or high. So I'm gonna mark off a couple just so that you guys can see, because this happens almost every single day. So as you guys can see, I have each Asian range marked off. So look closely at what price does on each day. Since we're in an uptrend, I more so expect price to take out an Asia high each time, every day, just because we are inside of an uptrend. But before it takes out the high, we see that a lot of the times price will take out Asia low before going higher and taking out the high. So that is where liquidity is at. And as you can see, the same thing applies to London, where price takes out London as well majority of the time. Even on this small wick right here, price takes out both Asia and London and then moves higher. The same thing happens this day, where price takes out both London and the London high and low before going higher. Now it doesn't do this every day, but if we're in an uptrend, the more than likely it will go and then take out London high. Same thing happened on this day. Price does what? During London session, we already took out Asia high. New York session starts, we take out London high. And then we do what? We reverse, and then we take out both Asia low and London low inside of the process. And then we do what? And then we move higher. So I'm hoping you guys are seeing what I'm saying, because it's a very cool confluence to use. So the next type of liquidity that is on our lower time frames is yesterday's high and yesterday's low. That's the main one that I use. I know people use weekly highs, weekly lows, but the main intraday liquidity that I want to go over is yesterday's high and yesterday's low. So let me mark off yesterday's high, yesterday's low, just so you guys can see. So now we're not looking at Asia high, Asia low, London high, London low. We're looking at yesterday's high and also yesterday's low. So on this day, I'm on the 11th, Wednesday, right? We had yesterday's high and yesterday's low marked off. What does price come and do? Price comes down after taking out all this liquidity we were talking about earlier. Price comes down, takes that out, and then takes out what? What do we take out? We take out yesterday's low, which is right here, and then we go back up, and then we take out. We already took out yesterday's high with this move right here. So right here we have yesterday's low. What does price come and do? Price comes, takes it out with this entire move. I already took it out in Asia session, but that's just that happens sometimes as well. It could be already taken out. If we come to this day though, we can see that price does what? Price barely taps, takes out yesterday's low, rejects, takes out what? The previous day high, and then what? It moves lower. So that brings us into our next topic. Now that we know what liquidity is, where liquidity is resting at, and the different types of liquidity that exist. Now that we can go the differences between a liquidity sweep and also a run of liquidity. All right, let me go back to where I was before. So the most important thing that you can look at when differentiating between a liquidity sweep and a run of liquidity is first structure. So when I expect price to run liquidity, which basically means price takes out, let's say we're in an uptrend right now, price will take out this level and this level and just keep on going, but not fully reject and go back down. That's what I mean when price runs liquidity. So the first thing I look at is structure. Right now we are very bullish directionally and also fundamentally. So that's the most important part to me. Where are we going towards, and also where are we targeting on the higher time frame? So when I go to the lower time frames, I know that more than likely there will be a run of liquidity when price is directional. Another important aspect of that, as I just said, is market structure, but also when price is ranging. Like we just got out of a range not too long ago. In a market condition that is similar to one like this, or maybe on the higher time frame, I wouldn't expect price to keep on running higher and higher and higher, because we are inside of a range right now where price will most likely take out a form of liquidity and then sweep it and then move back lower, just because we are inside of a range. But when we are in a volatile uptrend, I wouldn't expect price to do that, and I expect price to keep on running higher. Another important aspect I want to talk about is manipulation. So a lot of the times I also know that price will more than likely run liquidity when there already has been a manipulation happening. Right here, as we can see, there was a manipulation that happened inside of New York of the Asian range. I know after that manipulation, price is more than likely going to just run liquidity. Another important aspect I want to talk about is comparing assets with one another. So if I'm looking at NQ right now, I'll also pull up a chart on ES, because they more than likely they move similar to one another. So if I see that ES has already ran through our London high and that still has bullish formation and we're not stopping anytime, then I'm going back to NQ and I'm expecting more than likely it's going to do the same thing and keep on running higher. Now we might see a little rejection right here because we're at a very important liquidity level, but overall if I see ES keep on moving higher, I'm going to look at NQ and expect the same thing to happen. So now let's go over liquidity sweeps. Now, a sweep of liquidity is one of my favorite moves that the market does, because it makes a very, very good risk to reward for me personally, combined with some other confluences. So let's go to our same example. So let's look at what price did at the open. At the open of NY, price opened up, and what did we do? Look at where our sell side liquidity is at. And then look at what price does literally 30 minutes in. We take out all of these lows right here, and then that probably gets these people, all of these people thought on the move down that we were selling and probably would go lower. So where are those orders at? They're right here, they're right here, they're right there, they're right there. So price will take out Asia low, London low, and then what does it do next? It then rejects, and then we go higher and we take out all of this liquidity over there. So the main way that I like to know that price will do a liquidity sweep is at the open, how close are we to either Asia low or London low? Where is it sitting at? And most of the times when we're already inside of an uptrend like I was talking about, and I see price at the open selling off, then I know with almost 80 or 70% confidence that we're gonna sweep some level of liquidity and then move higher. Just because we're already in an uptrend directionally. So where does price actually want to go? Because we're actually still going higher. So why at the open are we selling off so aggressively? Because price wants to go higher, but it has to use other people as liquidity before it can go higher. Let me get some other examples for you guys. Since I trade New York, I like using London high, London low. So at the open, what do we see happen? We see price just sweep above London high for a while. Then we tap into this area right here. And then guess what? We reject after we swept out all this London high liquidity. We go lower and then we take out London low as well. If you can combine this with a couple of other confluences, you'll have a really good system where you can identify price directionally and know with confidence where it will probably go. So if you keep in mind too that price likes to do two things. Price likes to fill in imbalances, or price likes to deliver liquidity to other areas. Price is either filling in an imbalance or we are targeting an area of liquidity, especially on the lower time frames. This is the view that I like to see price in, because we're either doing one of these two things most of the time. So remember that liquidity sweep, sometimes you won't get a sweep, you'll just get a run of liquidity. So let's go to a day like this. Where do we have right here? We have our London low. We have equal lows over here as well. So what does price do at the open? Price opens up and then price just runs liquidity, doesn't sweep, and then keeps on going, keeps on going, keeps on going. This was a news day as well, I think. That's another important confluence as well. If we have very important news coming out, you will most likely expect price to just run liquidity and keep on going, because especially if it's different than expectations, price will low-key just keep on running the whole entire day on some pieces of news. So on this day, we just had a run of liquidity. Price did not sweep and reject and go higher. It just ran through and kept on going and kept on going. So I hope you guys enjoyed this lesson on liquidity, what liquidity is, where it's resting at, higher time frame liquidity, lower time frame liquidity, and also the difference between runs of liquidity and liquidity sweeps. I know I said liquidity a lot in this video, but I hope you guys enjoyed it. And if you guys want me to do another video on all of this, I'll be happy to.